China tech stocks, as I mentioned earlier, has been just crushed this week already on concerns about this broadening of the severity of Beijing's regulatory assaults on the tech sector. On Friday, a leaked memo tipped a sweeping overhaul of China's 100 billion private education industry, threatening basically to wipe out billions of dollars of foreign investment to the Chinese tech sector. And it's what I was talking about earlier, and we are seeing that tech sector just plunge for the third day in a row as investor fears are mounting over this broadened regulatory burden that is being cracked down on tech companies in China. Remember, the companies are owned primarily by the communist regime. They're hurting themselves. They're dramatically hurting their cash flow. They're dramatically hurting their GDP. And it's a huge, huge problem for them. They own it all, and they are impacted by it all. And their stubbornness and just strategy and outright belligerence as far as revealing any of their financial statements or complying with the SEC has got people in the United States flocking out of anything China. And it's dramatically impacting them. As I mentioned earlier, the Shanghai down 8%. That is huge to see the index down that much. So it is going to continue to be a huge problem. And, the stock benchmark, when we see a tumble more than 5%, on today, 7% yesterday, 8% before, we continue to see a drop. The tech sector falling in general about 8.7%. That's a huge amount of money. That is billions and billions, hundreds of billions of dollars. We have one firm, Alibaba, which you know is a retailer. It is the Chinese Amazon, so to speak, dropped 7.7%. We panic a little bit when we saw last Monday what happened at 2%. We're talking 7.7%. You're basically 2 points away from a correction, and 12 points away from a real concern of a pullback and correction. So, this is amazing, yet we still have certain people and certain organizations that are going to continue to double down on China. Most of them financial sectors and financial companies, which make absolutely no sense to me, but they don't care. They're only looking at market share. They want to get as much as they can and make as much as they can in as quick a period of time as they possibly can. But in all likelihood, it's going to continue to worsen. And we haven't seen anything like this since the 2008 from a global investors problem. $2 billion of Chinese market cap and stocks just yesterday gone. And it is going to cause real headache for Beijing. That is for certain.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.